This is Nightly Business Report with Bill Griffith and Sue Herrera.
Markets and the midterms. Stocks climb as Americans head to the polls. But if the House flips, will gridlock be good for stocks this time around?
Battleground states, why it's all about the economy in a number of gubernatorial races across the country.
Watch them run. Meet the women who once ran companies who are now running for office. Those stories and much more tonight on Nightly Business Report for Tuesday, November 6th.
And we do bid you good evening, everybody, and welcome. Wall Street was in a buying mood on this midterm election day. Stocks rallied into the close, as a matter of fact, helped by the technology sector that has lately been beaten down. Industrial stocks also rose. That group could benefit no matter the outcome of the election because rebuilding infrastructure is one issue that both Republicans and Democrats may agree on. Here are the closing numbers for this day, with the Dow gaining 173 points to close at 25,635. The Nasdaq added 47. The S&P was up 17. Now tonight, if the House flips to a Democratic majority and the Senate maintains a Republican majority, it could possibly lead to legislative gridlock. In the past, the markets have embraced such gridlock. But that may not be the case this time around. Bob Pisani explains why.
The consensus is that the House will be taken by the Democrats and the Senate will remain in the hands of the Republicans. And this is going to be good for stocks because gridlock is traditionally good for stocks. Well, experts say it's not clear it will be that way this time around. Remember, much of the benefits to stocks in the last 2 years has come because we are not in a gridlock environment. That's how the tax cuts got through. We didn't have gridlock. So there's very little chance the Trump tax cuts will be rolled back with a Republican Senate, but there's also very little chance the tax cuts will be made permanent with the Democratic House. More stimulus may be tough to come by. That's an issue. Many also believe the Republicans will become much more concerned with the buildup in deficits, which would leave very little room for stimulus spending, particularly on infrastructure projects. Everybody wants them, and nobody can agree on how to pay for them. So if there's even a slight slowdown in the economy, this is another problem. The president will likely try to blame the Federal Reserve for raising rates, which will put the Fed in a box that will make it difficult for them to back down. The Democrats will certainly launch a long investigation into the president's finances if the Democrats take the House. That's an issue. Trade tensions will continue and rates will keep rising. The bottom line is this. This is a very different environment from November 2017, a year ago, when the tax cuts were imminent. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
So let's turn now to Ed Mills for more on the markets and the midterm elections. He is a Washington policy analyst at Raymond James. Good to see you, Ed. Welcome back.
Thanks for having me.
Bob made the point that if indeed we do see the House flipped, it may be a little different this time around. Would you agree with that?
I agree with a lot of it, but where I might disagree is that I would really focus on the Senate. And I am a believer of the fact that the reason the stock market is up as much as it's been up since the election of Donald Trump is the deregulatory agenda that he is pursuing. So if the Republicans maintain the majority in the Senate, it is the Senate and the Senate alone who confirms any of his picks. And so with the Republican majority in the Senate, the deregulatory agenda continues. That is something that the market likes.
But if there is gridlock, how do you think the market would respond to that necessarily?
Well, what I would ask is there anything that the market is anticipating right now coming out of D.C.? You could argue we've had gridlock for the most part since Trump has been elected office because you can't get to 60 votes on basically anything in the United States Senate.
But you have had tax cuts, you have had lower regulation in certain sectors, the financial arena. I mean, it has been a boost to the economy, and we have seen that reflected in the stock market.
Yeah, and all of that regulation is going to continue. You say in the face of regulation for financials, those confirmations are 4 or more years long. We will have those individuals in their seats pursuing that deregulatory agenda tomorrow, regardless of the outcome of this election, and in many cases, regardless of the 2020 election. We did get the tax cuts. There's nothing else that's really there. And I would actually argue that the Tea Party in the House has prevented a number of bills that have wanted to be brought up. And you could see in the House a breakthrough on things like infrastructure, Things like an immigration bill, spending bills. The normal way in which we get things done in a divided government is Democrats get their priorities paid for and Republicans get their priorities paid for, and we have a deal. So that's a continuation of fiscal stimulus on the legislative side of this agenda.
Obviously, the market is a forward-looking mechanism, but what is the market not anticipating out of the midterms?
Well, I think that the market is underpricing the risk that we have with the China trade deal. And immediately tomorrow, we'll be focused on the G20 meeting at the end of the month. We'll be focused on what's coming out from the Mueller investigation. And that could add to a lot of volatility over the next couple of months and potentially for the remainder of the presidency of Donald Trump. So the volatility is what I'd be looking for because there's underappreciated risk. There's a lot of known unknowns out there today.
Ed, as always, thank you. Ed Mills is
Pleasure.
with Raymond James. Bill?
Well, the battle for control of Congress may be getting a lot of the attention, but some crucial battles are being played out at the state level as well. Scott Cohn has a rundown of what's at stake. He reports for us tonight from Atlanta, Georgia.
36 states are choosing governors this year, and no race is more close or nasty than Georgia. Republican Secretary of State Brian Kemp accusing Democrats of trying to hack the state's voting systems. Democratic former state legislator Stacey Abrams accusing Kemp, who's overseeing the election while running in it, of suppressing the vote. But this race, like the rest, is also about the economy. A similar story in Florida, pitting a progressive mayor against a conservative congressman. In Wisconsin, Republican Scott Walker is seeking a third term while facing growing questions about billions in subsidies for Taiwanese electronics company Foxconn. The questions coming from his Democratic opponent, State School Superintendent Tony Evers. And in Illinois, it's the battle of the billionaires. Republican Governor Bruce Rauner fighting for his political life against Hyatt Hotel heir J.B. Pritzker. Republicans hold 26 of the 36 seats up for grabs, meaning they have the most territory to defend.
What we've talked about is, let's look at the results. What states are the best rated as a place to invest? Where do we have the best educational outcomes?
Democrats think they have the winning message.
We're going to restore democracy and jobs in America and get people health care.
The governor's races are just the beginning. Voters will also decide more than 6,000 state legislative races, some $76 billion in state and local bond issues, and ballot initiatives that could fundamentally change the economy in a number of states. With health care a key issue nationwide, voters in 4 states will consider Medicaid expansion.
Economically, the most important issue to me is health care and making sure that my elderly parents are going to be able to have coverage.
And half a dozen states will consider tax measures, including Washington State, where they'll vote on a first-in-the-nation carbon tax.
Look, the clean energy jobs in America are growing twice as fast as the rest of the U.S. economy. So you bet, this is an economic growth model.
Also at stake in the states, who will control congressional redistricting after the 2020 census, an election with impact that will last for years. For Nightly Business Report, Scott Cohn, Atlanta.
Shares of cannabis companies rose today as investors wait to see if voters in 2 more states, Michigan and North Dakota, legalize recreational marijuana. Investors in pot stocks appear optimistic, sending shares of Kronos Group, Canopy Growth, and Tilray higher in trading today.
The price of crude oil briefly fell into bear market territory today, meaning it's down 20% or more from its most recent highs. Domestic crude today settled around $62 a barrel. That extends the recent slide that has pushed prices down more than 16% in just the past month. Jackie DeAngelis takes a look at why oil is coming under so much pressure.
The sell-off in oil intensifying after the deadline for U.S.-imposed sanctions on Iran went into effect on Sunday night. The reason? Iran's oil isn't going to disappear from the market with the flick of a light switch. And all other factors considered, oil may actually be falling back into oversupply mode. With respect to Iran, countries that buy the oil are receiving waivers. 8 were issued out of Washington last week. Iran's top importers, China, India, South Korea. Furthermore, the president saying yesterday that the sanctions will put pressure on gradually so as not to spike oil prices. Add to that a stronger dollar, OPEC production on the rise in preparation for Iran's shortfall, the U.S. pumping more than 11 million barrels a day, all in a seasonally weak period. And the recipe may yield oil prices trading even lower from here. The good news, the average for a gallon of regular, $2.75 according to AAA, That's down 16 cents in a month. For Nightly Business Report, I'm Jackie DeAngelis.
It is time to take a look at some of today's upgrades and downgrades. Square was upgraded to buy from neutral at Citi ahead of its earnings report tomorrow. The analyst cites the company's growth potential. The price target is $90. The stock rose 3% to $77.31. Shake Shack was upgraded to buy from neutral at Longbow Research. The analyst says the recent stock sell-off does not reflect the company's fundamentals. The price target is $60. The stock gained 5.5% to $50.07. And the New York Times was downgraded to underweight from equal weight at Barclays. The analyst there cites the stock's valuation because those shares are up more than 40% so far this year. The price target is $19. The shares fell more than 3% to $26.94.
Still ahead, CVS's prescription for the future of healthcare.
CVS Health turned in a strong quarter thanks to higher sales of prescription drugs. The company also said it expects its $69 billion purchase of Aetna to close this month, which it says will help reduce costs. Shares of CVS gained more than 5.5%. Bertha Coombs has more on the company's results and its vision for the future.
CVS says it's on track to close its $69 billion merger with Aetna by Thanksgiving, with only a handful of states left to sign off on the deal. CEO Larry Merlo told the analysts on the company's earnings call that the two firms are already targeting new programs to coordinate care for Aetna members and CVS customers that will improve their health while lowering costs.
One example is the better management of 5 common chronic conditions: diabetes, cardiovascular disease, hypertension, asthma, and behavioral health. And we'll accomplish this by building upon our near-term medical cost savings through the tighter integration of pharmacy and medical claims.
CVS reported $1.34 billion in profits for the third quarter, with pharmacy benefits margins up 6.5%, and retail pharmacy prescription sales also increasing from a year ago. Starting in the new year, the focus will be on building out CVS's primary care services at in-store minute clinics. Some larger stores will become healthcare hubs, initially just for CVS and Aetna insured patients, but eventually for other insurers and large employers.
We will have our first concept stores up and running early next year, and through these stores we will pilot the programs just mentioned and explore new services to better address the cost-quality access challenges of consumers.
CVS says it'll hold off providing 2019 earnings guidance until next year, following the close of the Aetna deal. But it still expects to reach more than $750 million in cost savings in the first 2 years of the combined company. And it says its customers will see savings as well from more streamlined care. For Nightly Business Report, I'm Bertha Coombs.
A profit and revenue beat at Ralph Lauren, not enough for investors. And that's where we begin tonight's market focus. The retailer did top Wall Street estimates, but comparable store sales, which is a key metric for analysts, those were flat, even after the company increased its marketing budget by 30%. And that news sent the stock down more than 6.5% today to $127.79. Eli Lilly reported better than expected earnings and revenue and raised its full-year outlook. That company said that sales gains for newer drugs helped offset declines for older ones.
In the last 3 or 4 years, we've launched 10 new medicines in the U.S. and around the world, and that's really driving our growth this quarter and in the past quarters as well. Revenue up 7% and good cost control in the middle of the income statement, EPS growth of 32%. And we're excited about the next wave of growth as well.
Some drugs, though, did, in terms of sales, fall short of estimates, and that resulted in a mixed quarter overall. Shares fell almost 4% today to $105.90. Archer Daniels Midland reported a better-than-expected quarterly profit thanks to strong export sales to countries other than China. Sales in China have been affected by the tariff tiff with the U.S. Company also reported a rise in profit margins for its oilseeds business. but shares did fall more than 1% today to 47.33.
Toyota raised its full-year profit forecast thanks to a weaker yen and sales growth in Asia and the U.S. Sales were particularly strong in China, even as its competitors warn of a slowdown in demand in that country. China is the world's largest car market. The shares rose more than 1.5% to 117.58. Private equity firm Thoma Bravo has reportedly approached Symantec about a takeover. According to Reuters, it's not certain that the interest will lead to a deal. Private equity firms Bain Capital and Silver Lake are investors in the cybersecurity firm. The stock popped 12% to $22.54. And after the bell, Papa John's reported a quarterly loss and disappointing sales. The company said a big drag on its results were the millions of dollars that it paid to remove the image of the former chairman, John Schnatter, from its franchisees and marketing materials. Same-store sales were down across the board, but the decline at franchised locations was smaller than expected. Shares initially rose in after hours, but they finished the regular day down nearly 2% to 53.47. And the fast food chain Wendy's said weaker than expected sales in its North America locations caused overall revenue to come up short. Earnings climbed higher, however, and it beat expectations. The shares were initially lower in after hours, but they ended the regular day up a fraction to 17.08.
Starbucks certainly has big plans for China. It began investing a lot of money in that market well before the trade war with the U.S. began. And today, Starbucks CEO was in Beijing mapping out his aggressive strategy. Eunice Yoon has more.
I'm at the biggest Starbucks on the planet in front of the world's longest coffee bar. And it's really no surprise that this would be in Shanghai because outside of the United States, this is the market that Starbucks is focused on for the future. Of course, there is a trade war going on, souring relations between the U.S. and China. And I asked CEO Kevin Johnson if he's seeing any impact on the business.
There's always something going on in geopolitical relationships and the geopolitical situation. And we've learned to navigate those things. So, you know, what's happening right now in the geopolitical situation, although we're not immune to it, we have not seen it impact our business. And so we're staying focused on the things that we do and do well.
Johnson said, despite the trade dispute, there is no reassessment going on of Starbucks' commitment to this market. Their biggest initiative these days is delivery. Food delivery is huge in China. Back in August, the company announced a new partnership with Alibaba. And now customers here can use a Starbucks app or another Alibaba delivery app called Ele.me and order a coffee to be delivered within 30 minutes.
We've re-engineered packaging of the beverages with spill-proof lids. We've re-engineered the packaging to separate hot from cold. We've worked with the Alibaba group to make sure that when that customer orders that beverage and that food, that when it's delivered to them and handed to the customer, the beverage is the same temperature as if the barista just prepared it and handed it to them. So it's all about quality experience for the customer.
Since August, 1,100 stores in 17 cities now offer delivery. That's about a third of the stores overall. They expect to expand that number to 2,000 by the end of this year. And what's really interesting is that Johnson said he sees plenty of innovation here in China, which could be leveraged and used in other countries for their digital strategies, including the United States. For Nightly Business Report, I'm Eunice Yoon in Shanghai.
Coming up, running for change.
Hey, look, if a businessman can be elected president, why can't a businesswoman? Coming up, we look at the women moving from the boardroom into politics.
Women candidates are prepared to make their mark on the midterms. A record number are running for office, and some are hoping to bring their business smarts to government. Jane Wells is in Phoenix for us tonight.
Ladies and gentlemen, Stacey Abrams!
A record number of women have been nominated for higher office from all walks of life.
That got me a Purple Heart, and I became the second woman ever awarded the Distinguished Flying Cross.
Many have never run for office before. In fact, some have been running companies.
People don't always respect a woman in business.
Lena Epstein is running as a Republican for Congress in Michigan, where she runs an automotive oil company, one of the state's largest female-owned firms. While in Indiana,
I'm Dee Thornton.
Dee Thornton retired from Xerox and is running as a Democrat for Congress. Businesswomen may come from different parties, but they're united in understanding money and managing.
I think in both the auto industry and in this world of politics, there's a lot of common factors.
BIBIANA BOERIO used to be the CFO of Ford Motor Credit. Now she's a Democratic congressional nominee in Pennsylvania. Early on, she tested two campaign ideas, one presenting herself as a female executive, another just as an executive. Women like both candidates. And men?
The results came out about 10 points higher that men were interested in the candidate for which the sex was not determined. You couldn't tell it was a woman candidate.
Also happening across the country, there are 33 races for the House and Senate in which women are running against other women, including a hotly contested Senate race here in Arizona. And in another such race in New York, the Republican nominee worked on Wall Street.
I think even my mother laughed when I said that I was going to run for the U.S. Senate, and she said, "Don't you need to run for dog catcher first?"
Shel Farley worked at Goldman Sachs and is now the Republican long shot running against New York Senator Kirsten Gillibrand.
But I think that we need more business people as opposed to lawyers in the Senate.
And while some women this year got into politics to fight Donald Trump, a common theme is that if a businessman can become president, why not a businesswoman? For Nightly Business Report, Jane Wells, Phoenix.
Now, after the midterm elections, Washington will have its sights set on several key issues: trade, infrastructure spending, and health care, just to name three. Now, to get a sense of how those might be affected by tonight's results, we're joined here in studio. We welcome our Washington correspondent, Eamon Javers, and our editor-at-large, John Harwood. Good to see you both. Welcome aboard.
Indeed.
Hey, guys.
How about starting with the tariff tiff with China? How does that change, if at all?
Ultimately, I think the Chinese are watching the election results tonight as well as everybody in the United States, and they're looking to see whether the president has a stronger leg politically after tomorrow than he did before. And ultimately, they're going to make a decision on how strong they think he is politically, and that's going to inform their negotiations. So I think it's got significant impact, not just here, but around the world.
And what does that mean, John, for NAFTA 2.0, depending obviously on what comes out of the election?
Well, you know, I spoke this afternoon to Nancy Pelosi, who, if the Democrats win the House, will take over as Speaker. She said, too quick to say how we're going to vote on that. It's a work in progress. We haven't seen all the details. But I do think Democrats are likely to come from the left at President Trump and say he hasn't cut a good enough deal for American workers.
So the negotiations might continue then?
I think so.
Yeah. Obamacare. We haven't heard much lately about the attempts to repeal it. Would that come back again, do you think?
Well, look, health care is such an important election this year as it's been in the past, but ultimately the Republicans felt really burned by their efforts to repeal and replace Obamacare. They weren't successful. What you've heard the president saying a lot recently is that he wants ultimately to protect the ability for people with pre-existing conditions to get health care. He said, we, the Republicans, are the party that's going to do that, not the Democrats. And I think that's rhetoric that just reflects the importance of the health care issue, but I don't expect them to make a full run at repealing and replacing Obamacare again because they were so badly burned.
This issue, guys, is moving in the Democratic direction, and what Democrats are going to do is try to get President Trump to follow through on his rhetoric about reducing prescription drug prices. He's taken some steps in that direction. Nancy Pelosi and the Democrats will want to take more.
What about infrastructure, John? Because that's a big ticket item, and depending on what happens with the House, it's going to be interesting to see whether that still has traction.
That is the biggest potential area of cooperation between the president and Nancy Pelosi, given the stated priorities. However, deficits are now over $1 trillion as we look to 2019. It's going to be very difficult to find the money to do that.
But politicians like to spend money. Right. So ultimately, both Democrats and Republicans have to go to the ribbon cuttings, to send some money back to your district. That is a very tempting opportunity, even though I agree with John completely. The deficits are a huge concern, particularly as we're hitting the $1 trillion figure. There's going to be a temptation to do something. That's the one area where you might see some common ground.
Well, then this will sound like a very naive question, but fiscal policy down the road. The president has talked about another 10% cut for middle class.
Right.
But if the House does get the majority again on the Democratic side, what happens to that?
Well, they control the power of the purse ultimately, so they'll be the ones deciding what checks the United States government writes ultimately. The president has said he's going to ask his cabinet secretaries for cuts of 5% in spending, ultimately maybe more in years to come. We'll see if that's real or not, if that was just pre-election rhetoric or if the president actually holds his cabinet secretaries to proposing those cuts. Cabinet secretaries don't like to cut their empires down by 5%. If they
You are so naive, Bill.
Indeed.
Well, what do you think, John? I mean, to Eamon's point, they don't want to come up with the 5%, but the president has ordered them to do so. But what does it mean?
That's not going to go anywhere. The Republicans in the Congress would not support those cuts. They've already maxed out in terms of what they think they can do on discretionary spending. And of course, Democrats don't want to go any further. I think this is going to be an alignment that is not good for fiscal responsibility because it's going to be very difficult to get deficit reduction. I do not think there will either be those 5% cuts in agencies or a new tax cut for the middle class.
All right.
Fascinating.
We'll let you both get back and start counting those votes. Eamon Javers, John Harwood. Good to have you both here.
Great to have you here, guys. Thank you. All right, before we go tonight, let's take a look at the final day's numbers on Wall Street. The Dow advanced 173 points, the NASDAQ added 47, and the S&P 500 was up 17. And that will do it for Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. We'll see you tomorrow.